if you see a stock that's doing this, okay, it's going up, and then for whatever reason, it gaps down. It could be news, could be sell-off, in the overnight, and when it opens up lower than the way it closed the day before, that's a gap. So typically what you look for, and you'll see this in my alerts week after week, whether the SPY gaps down or the Qs or NVIDIA, the narrative is the same because the technicals are the same. When a stock gaps down like this, the first thing that typically you will see is like an algorithmic reaction. It's usually an oversold bounce reaction. And you've seen this almost every single time there's a gap up or a gap down, there's an algorithmic reaction. If price is coming down and you see a gap up, you will immediately see a quick algorithmic reaction to try to close that gap, usually. So that algorithmic gap, that algorithmic move can come up, can come all the way up, partially up, at least a 50% retracement. But then it typically starts to head back down to retest that level. And that is where sort of the rubber meets the road, as they say. This is where, if you were a buyer, then this is where you would buy. A real buyer would come in here. And here's why. If you like the stock, you love the stock, you're not gonna buy it up here, right? It's too expensive. So if you get price action where you get sell-off or a gap down and a further sell-off, you wait for the algos to kick in to give you the bounce, the dead cat bounce. And then usually it drifts back down to that level of support again. And that is when you would want to buy it, right?